Hi, Lee Phillips again. I'm going to talk to you for a minute about a concept called gifting. Yeah, you know what gifting is. You give something to somebody. But the funny thing is the IRS and the government has an interesting way of looking at gifting. They figure that if you're gifting somebody something, that's an accession to wealth. It's an increase in their wealth. Somehow there ought to be a tax in this. And guess what? They've imposed a gift tax. Yes, we have a gift tax. We have income tax, estate tax that the dead guy pays, and we have gift tax. The person who gives the gift pays the gift tax. The person who gets the gift does not have to pay the gift tax. And I get the question all the time, how much can I give somebody and not have to worry about the gift tax? Well, there's what's called the annual exclusion. And you can give somebody, right now it's $14,000 a year. That's adjusted for cost of living increases. It's tied to the index, and it goes up, but it only goes up in $1,000 jumps. So it'll be a year or 3 or 2 or whatever before we jump to $15,000. And I remember when it started out at $10,000, so that tells you I'm older than I look, right? But at any rate, you can give somebody $14,000 or under, and there's no gift tax consequence. It's just under the board. It's de minimis, as the IRS would call it. And so you can give each one of your grandkids $14,000. Now, my wife, she can give each one of the grandkids $14,000 also. That's not a gift, but there is a catch. The catch is the IRS sees $28,000 coming out of my bank account to each one of these kids. That's a gift. So technically what you need to do is file what's called a split gift return. You're just telling the IRS that he gave $14,000 and she gave $14,000. And by the way, I have seen the IRS come back and say, oh, you gave $14,000, huh? Did you give the kid a Christmas present? What did you give him for Christmas? That's over $14,000. So I usually tell my clients that they should be just a little under the $14,000. There's a concept called discounting that we need to talk about in this gift stuff also. And that is, if I give you a $100 bill, that's $100, right? But if I take the $100 bill and I put it in my limited liability company or my corporation, we'll put it in a corporation, and then I give you $100 worth of stock in my little corporation, what's that worth to you? Is that worth $100 in green? Not likely. You can't sell the stock. I'm not going to pay a dividend. What's the stock worth to you? It certainly isn't worth $100. I mean, I'd rather have the $100 in green than your stock certificate. And the IRS recognizes that. So they will discount the value of the stock certificate. Even though it's $100, when I get it, the IRS says that's not worth $100. The problem is people have abused that discount. They've said, oh yeah, it's only worth $20. And the IRS, they argue back and forth. Basically, if you're discounting above 25%, you're going to be in trouble. So maybe the stock certificate is only worth $75 or $80. But that's still a discount, and I could just take my cash, put it in the company, give the kid the stock certificate, and I have discounted it. We're doing that for gift tax purposes and to get property out of a large estate. Now, you don't have to worry about large estates too much anymore because the federal estate tax went up under Trumpy. It went up to almost 11 million bucks a person. Husband can give 11 million, wife can give 11 million. That's 22 million. That eliminates estate taxes for most of us. Additionally, the gift tax. If I give $1 million today, there's a gift tax on that. But the law says I get a credit. to pay gift tax or estate tax. It's called a unified credit because the gift tax and the estate tax are unified. And I get a certain amount of credit. I get enough credit to pay the tax on the $11 million. Actually, it's 10,989 or something. I mean, it's, anyway, it's not quite 11. But I get the credit equal to the tax that would be charged on that. Now, I can use that credit during my life to pay the tax on the $1 million gift, which means I don't have as much to pay tax with when I die, but there's no actual out-of-pocket money paid to pay the gift tax on the 11 million, on the $1 million gift, unless my cumulative gifts are above the $11 million level. You understand? I hope so, because that was as best I could do. Hey, this is Lee Phillips talking about gifting.